MicroStrategy's top 100 breakthrough is fueled by Bitcoin and fueling Bitcoin in return. How does this feedback loop keep pushing both higher? Table of Contents. MicroStrategy, a company famously tied to Bitcoin's wild journey, just hit a major milestone. As of November 20th trading session, it has jumped 48 places in 2 days, landing at 85th in the exclusive club of the top 100 publicly traded U.S. companies by MarketCap.as of November 20th. MSTR's market cap has climbed to nearly $111 billion following a 12% surge in its stock price on November 19th, coupled with an additional 15% gain as of this writing. Currently, the stock is trading at $482 per share, marking a remarkable close to an already explosive year of growth. Concurrently, Bitcoin, the cornerstone of MicroStrategy's corporate strategy, has soared to a fresh all-time high, breaking 94,000 and trading at 94,850 as of November 20. For context, MicroStrategy's stock has skyrocketed 620 year-to-date in 2024, while BTC itself is up over 125. But since adopting Bitcoin as a treasury asset in 2020, MicroStrategy's stock has soared an astonishing 2,739 narrowly, surpassing NVIDIA's 2,688 gain over the same period, reshaping how Bitcoin-heavy strategies are pushing MSTR into a league dominated by tech giants, banks, and energy conglomerates. This feat places MSTR ahead of NVIDIA, currently the world's largest publicly traded company, with a market cap exceeding $3.6 trillion and celebrated as a leader in artificial intelligence and gaming innovation when comparing performance over the last 5 years. So, what does this all mean for Bitcoin? Let's dig deeper into the relationship between MSTR and Bitcoin and explore how their paths influence each other in ways that might just be rewriting financial history. MicroStrategy has redefined its identity over the past few years, evolving from a business software company to a leader in corporate Bitcoin adoption. Its strategy is straightforward: accumulate as much Bitcoin as possible and leverage it as a long-term asset. Since its first purchase in 2020, MicroStrategy has continued to expand its Bitcoin reserves through bold acquisitions and innovative funding methods, tying its growth closely to the performance of BTC.as of November 20th. The company holds approximately 331,200 BTC, acquired at a total cost of $16.5 billion, or an average price of $49,874 per Bitcoin. Amid the current bull run, the company purchased 51,780 BTC for $4.6 billion between November 11th and November 17th, at an average price of $88,627 per Bitcoin. MSTR's BTC holdings, now valued at over $31 billion, are more than 10 times the Bitcoin holdings of Marathon Digital, the second largest public holder with around 27,000 BTC, and far exceed Tesla's 11,500 BTC. To fund its acquisitions, MicroStrategy relies heavily on capital-raising strategies. On November 18th, the company disclosed in an SEC filing that it sold approximately 13.6 million shares for net proceeds of $4.6 billion under a pre-existing agreement. Despite this, it still has $15.3 billion in shares available for future issuance, giving it significant flexibility for continued investment in Bitcoin. And the company isn't done making bold moves. Just 2 days ago, MicroStrategy unveiled a $1.75 billion convertible senior note, set to mature in December 2029, with a 0 coupon rate. Convertible senior notes are a unique type of debt instrument that allows investors to lend money to a company with the option to convert that debt into shares at a later date, typically at a pre-agreed price. What's intriguing here is that MicroStrategy's notes come with a 0 coupon rate, meaning they don't pay any regular interest to investors. In a new twist, MicroStrategy announced that due to high demand, it had upsized the convertible bond offering from $1.75 billion to $2.6 billion, including a $400 million greenshoe option with a 55 conversion premium. Given high demand, we upsized our MSTR offering of 0 convertible bonds due 2029 from $1.75 billion to $2.6 billion, including a $400 million greenshoe option, and priced it at a 55 conversion premium. The greenshoe option, commonly used to accommodate excess demand, gives underwriters the ability to sell additional bonds beyond the initial offering. The 55 conversion premium represents the percentage above MicroStrategy's current stock price at which the bonds can be converted into shares. It shows that investors are willing to pay a substantial premium to bet on the company's long-term growth, even as its stock continues to rise, essentially tying their fortunes to the company's Bitcoin-driven strategy. That MicroStrategy's story is far from finished, and its next chapter is shaping up to be even more audacious than the last. MicroStrategy's leadership, led by Executive Chairman Michael Saylor, isn't content with simply making Bitcoin a cornerstone of its own strategy. It's working to bring this vision to the broader corporate world. On November 19th, Saylor confirmed during an X Spaces hosted by Van Eck that he would deliver a 3-minute presentation to Microsoft's board of directors to advocate for the adoption of BTC as part of their investment strategy. https://co.wh Saylor has openly stated that he believes Bitcoin should be on the agenda for every major corporation, from Apple and Meta to Berkshire Hathaway. Saylor argues that holding Bitcoin as a tangible asset could help companies stabilize their stock value, particularly when compared to relying heavily on quarterly earnings performance. For instance, Microsoft's enterprise value is currently tied to 98.5% of its earnings, with only a small fraction supported by tangible assets. Saylor believes BTC could offer a more balanced approach, potentially preserving shareholder value over the long term. Beyond influencing others, MicroStrategy is doubling down on its own Bitcoin strategy with a bold initiative called the 21-21 Plan. Announced in late October, this ambitious plan aims to raise $42 billion over the next 3 years, $21 billion through equity and another $21 billion through debt. The goal is to buy more BTC and solidify its position as the world's leading Bitcoin treasury company. According to CEO Feng Liu, the capital raised will allow MicroStrategy to deploy its BTC more strategically, creating opportunities for higher returns while maintaining a strong reserve. MicroStrategy's strategy has created a fascinating and controversial feedback loop that ties its performance directly to Bitcoin's trajectory, amplifying both assets in the process. The more Bitcoin MicroStrategy buys, the tighter the circulating supply becomes, pushing Bitcoin's price higher, especially in bullish markets. The company's stock, fueled by the rising value of its Bitcoin holdings, attracts further investor interest. Boosting its price at a higher stock price allows MicroStrategy to raise more capital through share sales or debt, and that capital is channeled into buying even more Bitcoin. It's a cycle that feeds on itself, and while it's proven highly effective so far, it also raises important questions about its sustainability. Critics are beginning to sound the alarm over how sustainable this strategy is. For example, Peter Schiff, a well-known Bitcoin skeptic, has questioned whether this self-reinforcing cycle is creating an unsustainable bubble. The higher the price of MSTR stock, the more shares Saylor can sell. The more shares he sells, the more Bitcoin he can buy. The more Bitcoin he buys, the higher the Bitcoin price rises. When the price of Bitcoin goes up, the share price of MSTR goes up more. When does it end? But what makes this feedback loop particularly unique and potentially risky is the scale of MicroStrategy's Bitcoin holdings. The company now controls over 1% of Bitcoin's total supply, a staggering figure that gives it outsized influence on the market. Every major purchase tightens the available supply, potentially triggering upward price pressure on BTC's price. That if MicroStrategy's strategy succeeds, it could encourage other companies to follow suit, amplifying the cycle further. But if Bitcoin's price falters, the entire mechanism could unwind, with both the stock and Bitcoin suffering as a result. This also means that Bitcoin's price is increasingly tied to the actions of large institutional players like MicroStrategy, which didn't exist in its early days as a decentralized asset. The bigger question is whether this symbiotic relationship between MicroStrategy and Bitcoin can remain beneficial in the long term, or whether it's a fragile structure that depends too heavily on perpetual upward momentum. Disclosure: this article does not represent investment advice. The content and materials featured on this page are for educational purposes only.